We're live again for another week, and another week's gone by, and for some reason, the stock market has been pumping. It feels to me more like a dead cat bounce than it does a full recovery, but we did bottom out last week, and for whatever reason, we've had a 6%, I guess, regrowth, re-engagement, and I'm not complaining. I'm still almost neutral in the market, so if it goes down big time, I don't feel it. If it goes up big time, again, I don't feel it. I'm still apprehensive I could get back in. I have quite a bit of cash reserves, but at the moment, I feel like even in the real estate world, I've got a couple of properties here, and I'm like, I'm waiting for that moment where I'm going to start getting into real estate again heavily and start acquiring big time. It's just not right now. By the way, I don't have a topic for today. I'm literally just gonna leave it open to you guys. So throw your questions and comments into the chat below, and we'll chat a bit more about it. Someone asked if it's time to sell property. Well, it depends on where you are and what you're doing. I'm bullish on the long term for real estate. So if your time horizon is long, then hold. Or buy right now too. Like there's some great buying opportunities. We don't know where the bottom will be and what sectors will be heaviest hurt. But I would say right now the market is cool. We are down. Average days on market is increasing. People are taking listings off and putting them back on so that they don't look stale. But not a lot is selling. Inventory levels are building. That's a good thing. If you're looking to buy, if you're looking to sell, not so much. Not a great time to sell right now. But if interest rates continue to rise and let's say inflation doesn't get under control, hopefully, Bank of Canada announced another 0.5% increase on interest rates. So rates keep going up, they keep jumping. By the way, guys, I'm just going to say that I'm not feeling 100% today. The last 2 days I had almost no sleep, but last night my daughter fell off the trampoline, hit her head. We had to take her to the emerge in the hospital. We watched her overnight. I watched her every 60 minutes to make sure she was safe and good, and I slept like maybe 2 hours, 3 hours. So when this stream is over, I'm going to put my kids to bed, and then I'm going to watch a show, and then I'm going to pass out and sleep for like 10 hours. So if I don't make a whole lot of sense right now, it's because I'm exhausted. I had like an hour sleep, an hour sleep, an hour sleep. And that's what I'm functioning on. It's like broken down like 3 70-minute windows of sleep, which anyway, that's what being a dad is all about. Talk about fire, and I'm thankful I don't have to work today. If I had to get up and grind it in a job, that would have been, I would have had to call it in, personal day or a vacation day, because family first. When my daughter was hurt last night, and it was pretty bad. She had a pretty bad fall. Her cuts and scrapes and bruises and all that will heal, but the head bang on concrete was like, geez, that really scared us. And when she first got up, she was incoherent. She had a bit of a concussion almost. And luckily, at the age that my middle one is at, there's a lot of fluid in the head, and so concussions are actually very rare. And thankfully, the doctor said that she's going to be probably just fine. I'm going to monitor her for 72 hours, but fingers crossed it'll be okay. But in that moment, none of the money in the world mattered. And when you're sick yourself, or when your kids are sick, or when your close family is sick, nothing else matters. All that matters in that moment is them getting better, and you would give anything to save their life or to make them better. I would drop thousands of dollars if it meant making them better and saving their life, right? And so that kind of it's nice in some ways to have those clarifying moments and those struggles and those hard times that we have. I have 3 kids, so my life is full of drama all the time. Like, I'm a full-time dad. That's what I say. People ask, what do you do? I'm a full-time dad. Yeah, I'm an investor, real estate investor, stock trader, many other various hats. I do a lot of lending. I'm doing more lending now. Funded another mortgage on Monday, and I made a nice lender fee of the lender fee is the active part. That's me reviewing the deal. That's the appraisal piece. I did it all virtual, but for 4 hours of work, I made 11 grand. So that wasn't bad. It's been a good week. That's like my active income, where now that income I can go and take that and invest that. Whereas the interest rate I'm getting is a great rate, so I have no problems there either. And it's a first secured mortgage, under 80% loan to value or thereabouts. Anyway, but having these moments of struggle remind me how important money is. I know it sounds weird, right? Because in that moment you're like, money doesn't matter at all, and you drop all the money in the world. But time is important, and money is important, because if I didn't have the money, I couldn't rush out and, if she needed something, I couldn't drop $1,000 on that. I couldn't take a few days off. Sometimes taking the next day off could cost you thousands in your business. If you had an important business meeting you had to cancel, as an entrepreneur, that can cost you thousands. So as an entrepreneur, you need those emergency funds set aside. You need those lines of credit to tap into. You need that rainy day fund to be there, to have that cash flow for when stuff happens. As an entrepreneur, you can't take a sick day. It costs you to have someone pay to fill in, or to lose that client, or whatever else happens. So it's just something to think about, guys, if you're building your fire fund. And despite the stock market being shit right now, and like my timing being the worst for getting into the stock market and riding pretty much just tech and growth stocks for 50% of that, 50% of my portfolio in tech and growth, and I wrote it down like 28%, and then I sold off most of it. I'm still holding some of it, but I'm almost a neutral. I'm slightly positive delta, but almost neutral. So right now I have enough insurance, or like basically I just sell calls on my portfolio, so that it's like insurance where I get paid if the market stays flat, if it goes up, if it goes down, I get paid, but I don't make a lot if the market goes up. It kind of caps my upside right now, which is a stupid thing to do in a recession, but I don't feel we've gone deep enough. I think that we're in a bit of a recovery. I think what we're going to have is a pullback. And sometime between now and the next 12 months, I think we'll see NASDAQ bottoming 45%, S&P 25%, very realistically. I think real estate is already down, but I could see another 10% or so correcting. On top of that, I think, because I think real estate prices can be a bit sticky, I do think that despite prices might not fall all that much, because if you look at how much they've appreciated in the last couple of years, it's nuts. We'll never go back to even a few years ago. But I do think that it's one of those situations where there will be a lot of inventory that will build up on the market, and there will be more for sale by owners, and there will be it will take longer to sell a property. It used to take months. You put a property up, you'd be trying to sell it for like 2 months till the right buyer came along, 3 months sometimes. That wasn't unheard of. That market will come back. We'll start seeing for sale by owner signs. We, as experts in the industry field of real estate, who understand it, who are in the business, we can get there and negotiate vendor financing. We can get there and negotiate a better price. We can negotiate in many different ways to make the deal sweeter. We can do super long closings if that's attractive. Lots of things we can do that we couldn't do before. And so this is where the skill is really important. In a hot market, buy anything, even a turnkey condo, and you'll make a ton of money, right? But these types of markets where it gets more balanced and a bit of a more bearish market, these are the times where the real pros excel. So in many ways, we should be thankful for that. Next in the chat, someone says the stocks will recover in the fall. I don't know. I'm not sure whether the fall will be strong or not. Unsure at this point. It depends on the point at which the government does or does not get inflation under control, and how many rate increases there are in the works. Some people are saying we'll have another 200% increase to interest rates. Some people say it's going up 50% higher. Maybe we'll only have 50 basis point hike, and then inflation will get under control. I think that's unlikely. I don't think that scenario is a very likely one to happen, but it is something that could happen, right? So it's just weird times that we're in. For the first time in a long time, I am bearish on many sectors. I'm even bearish on crypto right now. Let's see. It says, hey Mike, what's your position on gold? I'm even bearish on gold. Gold is supposed to be an inflation hedge and a recession play. I don't even feel great. I'm neutral on gold. I don't even feel great on gold right now. Prices are being suppressed. I think that the challenge that gold has is it used to be the place for investors to park capital when they wanted to beat inflation and they wanted to have somewhere safe to park their capital. I think treasury bills and all that kind of stuff are competing now. Like some of the bills are like 6, 7, 8%. You can park it with government backing at pretty strong rates. So it's challenging for gold because of the other draws for capital right now. And there are so many stocks on sale, and real estate will be on sale. And real estate, again, is another place that people typically will park capital, especially land. So I don't know. Institutional buyers will continue to buy, like people with cash who don't care or can't use leverage in the same way that we can. Maybe they have certain regulations in their fund that only allows them to lever 40% loan to value, or maybe they're just parking insurance money, like a bunch of insurance capital needs to stay safe, into like a 4 cap property. Those larger multifamilies, and even they're getting into some of the smaller deals too, which doesn't make a lot of sense to me. But anyway, those institutional capital buyers who have cash, as the cap rates rise, they will gobble up that inventory. So at the same time, I think that there's definitely a bottom for real estate that's sticky. So it's a safer place to put capital. For me, the reason I sold a lot of my properties off was just, I just wanted to not have the headaches anymore. It's something that, being a landlord in Ontario is shitty. And just in general, like my net worth and my public profile, just don't enjoy it. So for me, a lot of it was strategic. I could take the capital and put it to use in better places and make more with it with less time investment. Yeah. By the way, if anyone here is looking for lending, hit me up. I've got some capital that I'm looking to redeploy. It's expensive. It's not going to be cheap, but I'll fund flips. I'll do it for equity or as a fixed or a hybrid. I've done hybrid deals too, where there's I get a part of a capital gain. So looks like some people are in the channel that aren't usually here, which is cool. I love it when new people join, because that's what we're looking for, is to grow the network. Are you rich? How did you get rich? I guess define rich. I suppose a lot of us watching are wealthy. Sure, just being born in a first world nation makes you, by definition, one of the wealthiest people in the world. Like if you're living on minimum wage here in Canada full time, you're technically still in the top half in the world. So put that in perspective, right? Like globally speaking, minimum wage puts you in the top half of human beings. So be thankful if you have a minimum wage job, right? In Canada. Yeah, I'm doing fairly well. If you follow the channel, I've been very successful. A series of businesses, made most of my money in real estate. I also do stocks. I do a little bit of crypto, a little bit of everything. But yeah, happy to share what I've learned, and hopefully I can help you guys. Next question was, in Brampton, homes are not selling, but Oakville, nicely renovated homes are selling. It's discouraging for me to sell because I live in Brampton. Sorry to hear that. Brampton is a rougher city. I feel like it had a greater level of appreciation in the bull market, but not as strong of a footing, I think, in times of recession. The same is true like in London, in East London. It's a rougher, sketchier area of town. And those properties don't hold their value near as well as the properties in the A+ locations. So the first rule of real estate is location, 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 right? If you've got a solid building with great bricks on good dirt in a good location, right, you're solid. Still the market could take you down a little bit, but yeah, I think it's interesting when you look into the higher end areas. So as an example right now, on the water in cottage country, the market is still hot. The market is up right now. In areas of London, areas of outside Toronto, Oshawa, market's down. But in some of the cottage country areas, prices are up. You're like, well, why is that? Because the buyer of a cottage typically is coming in there with a lot of cash. The typical profile of someone buying that is coming in with their brother or sister, coming in with their friend. They're buying a cottage together, a family cottage, a bunch of people getting together. They've usually got a pile of cash. And you got to remember, for the last 10 years, we've been in the strongest bull market we've ever seen in history. Stocks are ripping. Crypto has made so many millionaires. Real estate has tripled, right? Almost tripled. In certain segments, almost tripled. And if you're leveraged with that, so you put 20, 30% down, you had a mortgage for the rest, that means your investment's up 500%, 1,000%. That's huge, right? I think that's made a lot of the people in that buyer segment wealthy. And in Oakville's example, Oakville's very well to do. And the people typically buying those homes, if they owned homes in Oakville already, which is likely, maybe a couple rental properties, they might have $5 or $10 million in equity. And so, they've got a lot of capital. And that buyer pool is wealthy. And they can afford to pay a little more. So maybe that market isn't as sensitive. Maybe there's still pent-up demand there of people trying to find houses in that higher posh area of Oakville or whatever, and they can't. Or in the cottage country, I'm noticing, there's a bunch of pent-up demand. The good properties are just flying off the shelves still, multiple offers over asking. But then you go and look at a home in London, and it's like just crickets. Offer date comes and goes, no offers. Prices will fall a little bit as a result of that. We're in a bit of a bear cycle. It just depends on which segments of the market you're looking at and the type of buyer. Like the average person buying a $700,000 house that's their house to live in, they're stuck based on what they can qualify for. And if they can qualify for a $600,000 mortgage and they had $150,000 for down payment and closing costs, they maybe qualify for $600,000 before. But now interest rates are creeping from say 2%. Now we're talking about, one of those. Your stress testing rules are based on your approval rate, certain amount typically, or there's a flat rate plus a certain amount. And it's the quality rules right now. If you're not on a variable product, you're on a fixed product, are like almost 7%, which means now when you qualify instead of 5, it's like 7.5 or 8%. You qualify for 30 or 40% less. So the mortgage you would have qualified for, now you qualify for 540 instead of 650 or whatever, or 500 instead of 600, whatever, maybe a little bit more, maybe 470 out of 600. So now you can't afford to pay as much unless you have an extra $130,000 in cash floating around. By the way, also your mortgage payment is higher as a result because interest rates have risen. So you can afford less and you can qualify for less. And so people will have to offer 10 or 15, 20% less for properties. Investors, the same thing, unless they're buying cash. You just can't qualify for as much when rates are high. So as soon as we have that inflation, as soon as we have that news from the inflation numbers and the government, central banks getting in there and saying, okay, we're in a situation where we see rates are going to start coming down and they start forecasting them to come down, that is when it's a great time to be buying. Just before that point, when we've been hammered with rate increase after rate increase after rate increase, stuff's been sitting on the market, I'll let you guys know. I'm actively watching. There will be a time where it makes sense to start buying right now. We don't know how easily the government will be able to get inflation under control, or how deep the recession that we're currently in is going to last. We're in a bear market right now. We're in a real estate bear market, a crypto bear market, and a stock bear market. It actually is a good time to start investing, to be honest, if you're dollar cost averaging. If you're investing $1,000 a month from your paycheck, this is a great time to be doing it. Buy right now. I guarantee you 5 years from now, the price of stocks, crypto, all that will be higher than it is now. The Nasdaq's down like 25%, let's call it. That means you're getting a 25% discount from only a few months ago on everything you're buying, and it will recover. Maybe it'll go down another 20%. We don't know. We don't know where the bottom is. Anyone knows that would be a billionaire because they'd be able to use leverage and make those trades. No one knows. The best stock traders in the world have no fucking idea, right? But what we do know is that, historically speaking, the best time to retire early is during a recession. So if you're planning to retire, if you're planning to start investing, now's the time to do it. At the bottom's the best time, but the second best time is with the data we already have, and we know that we're in a recession, so it's a good time to start buying. The worst time to retire and to put capital in the market and rely on that to live on is at the top of the market, unfortunately. So if you just retired in, say, December, I feel really bad for you, because if your 4% safe withdrawal rate number, you're relying on your 25 years living expenses set aside, you put in the stock market, and then it dropped 25%, you're now 25% short. The only time the 4% safe withdrawal rate rule, the 4% rule, so to speak, for early retiring, not running out of money and be able to live off the interest on your capital, the only time that fails in a Monte Carlo simulation, if you run all the possible simulations, is if you retire at the top of the market. That's the only time it fails. So if you're in that position, it'll be okay. Just hang on. If you can ideally draw for your living expenses from a line of credit, or you can work a little bit part-time to cover your living expenses, or find a side hustle during this time right now during a recession so you don't have to sell your stocks, you'll be okay. That's the best advice I can possibly give you. Don't draw down right now. Don't sell off right now. Hold, right? When we're in a recession. It would have been smart if you got time to take it out when it first started to drop, but more often than not, when you try to time the market, you end up just missing a lot of the gains. All right. Okay. Is Southern Ontario a lot worse in terms of being overvalued versus Saskatchewan and Alberta, in your opinion? It depends. There are so many different markets in Alberta and Saskatchewan that it's like, are we talking about like Edmonton? Are we talking about Calgary? Are we talking about some boony town in the middle of, are we talking about Winnipeg, in Manitoba? I don't know. Like, it depends where you pick out west. They're different places. But in general, investing, I think, out west right now, you're going to pay a premium because Alberta's doing in general, Alberta's doing very well because the price of oil and commodity prices are high. And those areas do very well with commodity prices being high, as well as the prairies. Farmers are doing well too. Commodity prices are going up. Yes, they're experiencing inflation on the production side, but their end units are, they're making a nice price on that as commodities rise. So oil specifically is driving things in a big way. So it's not as attractive as it was in the fall. It was an attractive opportunity in the fall where Ontario was going nuts with appreciation. That market has not seen Alberta has not seen a lot of appreciation in the last 4 years, 5 years relative to Southern Ontario. So there's a lot of catching up to do, I would so to speak. I am less bullish on, where I am bullish on though is waterfront property. I feel like that's something where you can just Airbnb it, create some cash flow, and it'll hold its value very well. If you have a rare property, the Canadian dream is having a house and a cottage. Like everyone just wants to have a cottage. Everyone wants that lifestyle. There's so few quality waterfront properties in the right areas that kind of property will hold its value. The wealthy, top 10%, are richer than they've ever been. We are in a situation where we have more disposable capital. And so I'm trying to think in that mindset, like what someone like me be thinking, or someone even wealthier than me be thinking if they had 50 or 100 million. They'd just be wanting to acquire quality assets. And they'd probably be, in times of bear market, you cut your less quality assets, right? It's why crypto is doing so shit right now, because crypto is not quality, right? Like ETH and Bitcoin, that shit's a bit fugazi, right? It's a bit manipulated. It's not regulated well. There's a lot of volatility. It could go to $10,000 Bitcoin. It could also be 100,000 Bitcoin in the next 5 years. And I'm very bullish on Bitcoin, but in a bear cycle, capital flees the growth stuff. It flees the tech, which is unfortunate for innovation. It's unfortunate for our societal advancement in general, of where we can be as a people. But it's just the reality. People, they go to gold. They go more than gold. They go to value stocks that like utility plays and telco and commodity stuff that like distributors of commodities like Pembina Enbridge. Enbridge is a great example because they just sell the gas to all the homes. They get a fee for distribution. They're doing very well right now. New projects are expanding, et cetera, so forth. Every house has to pay for gas to heat their home, to heat their water, et cetera, so forth here in Ontario. So that's a business that pays like a 6-7% dividend or whatever, and it's solid. You can count on a business like that to produce cash flow, even in a recession. So capital's fleeing to those areas from your Teslas, your Bitcoin, your growth stuff. So that's going to hurt those sectors. I actually see those sectors as buying opportunities. Are we at the bottom? I don't know. But as the capital rotates, right? Typically, if the capital's already rotated, you don't want to follow the herd. That's not prudent investing strategy. So I wouldn't say follow the herd. I still have some of those types of stocks in my portfolio, but it's not the majority of my portfolio. It's not where I'm looking to put in new capital. Okay, next question up on the thing. If we get a super chat, I'll prioritize it, but I just moved down the list one at a time, guys. Eric, how you doing? Hope all is well. It is well. Thank you for asking. Well, other than that, I'm exhausted and gonna go to sleep after this. Bag says, what is capital? How can I get capital? Well, by capital, I'm typically talking about money. Money. Where do you get money from? Well, you can work for it at a job. You can invest it. It'll grow, and then you'll have more money. You could lend it out. It'll grow. You'll make more money. You could invest it into stocks. You could buy real estate using the bank's money, borrowing from other people, and then you create equity in the deal by doing work to it or finding something that's under market and then realizing that value or renting it out, collecting cash flow from that, and then effectively you will build equity in that property, or you'll earn cash flow, which is all the rent minus all the expenses, should be a little bit of profit in your pocket for the work, and you'll make capital. And then you can take that capital and redeploy it from one deal onto the next, from one stock play onto the next. Ideally, if you're going to be buying and selling stocks, you should probably buy a basket of all the stocks. So buy the indexes, buy your SPY, your QQQ to follow the NASDAQ, that kind of stuff. So you're exposed to the entire market. Your SPY is your S&P 500. You're exposed to the top 500 companies. You're not picking one horse and hoping they win the race. That's gambling. We don't want to gamble. We want to invest. And so, yeah. Hope that helps. How do you become a private lender? Well, it's very simple. You literally find someone who wants to borrow from you, and you evaluate their property deal, and then you fund their deal, and you have your lawyer register a mortgage on title. That's it. Um, yeah, I guess you would advertise, you'd find clients, talk to brokers, find flippers or people who want that capital, and that's it. That's how you do it. You'd have to have money to lend out, um, obviously, to become a lender. So, yeah. You could maybe refinance your house, take some equity out of there. There's lots of places you could tap in to capital, maybe that's just sitting silent, like in your house doing nothing. What's a good place to invest in Canada? I was thinking Windsor. I personally don't like Windsor. I have not liked Windsor for a couple of years now. I think it's overvalued for what it is. Yeah, I think Windsor's a lot shittier version of London, and the prices are not that much better to justify. It's very blue collar rough. I don't know. I'm not a fan of Windsor, but there are lots of investors who like Windsor. If you live in Windsor, maybe you have some sort of strategic advantage in Windsor. Cool. Nothing wrong with that. I think that I live in London, so I invest in London. It's a strategic advantage that I'm here and I have connections in this market. That's a good point. Thank you. Jalad says, when buying a rental property, how much rent are you trying to get? And relationship to the rental property. Example, a $200,000 property, what would the rent price be looking for? So it depends. Like a $200,000 house is probably going to be a shack in London that is like a single family 2-bedroom house, maybe at best, or a condo. And a single family house nowadays, it's 200 grand, is probably going to rent for like $1,100 or $1,200 a month. It'd be a shitty house, unless you renovated it, in which case maybe you get like 1,500-1,600 plus utilities, maybe 1,900 inclusive. Maybe on Airbnb you throw it up and you get 1% rule. You got to put in work. You got to stage it. You got to set it up. You got to run the Airbnb, which is a bit more active management unless you hired someone to do it, in which case that person takes 20% of all gross rent off the top, plus expenses and fees, which typically works out to about 30% of your top line, which is the same as about 50% of your net profit on the property. So hiring a manager to do Airbnb, that makes it a little bit more tricky as well, because again, so much of the profit is eaten up. You might as well just rent it out at that point. It's almost the same thing. But at least with Airbnb, you don't get a long-term tenant, so you can keep up with market rents and keep up with inflation, and you have full control of the property. You can cancel a listing and your property's vacant again if you want to choose to sell it, refinance it, whatever, reposition it, whatever you want to do. So I still do like the Airbnb play because of the flexibility, especially in Ontario, where landlords have no rights at all. Yeah, so what else do I have to say? Yeah, I think I answered that question fairly. I think it depends on the property. Like typically the 1% rule was something we used to look for. So a $200,000 property can rent for $2,000 a month. That's not the case anymore. The market's like, a $500,000 property rents for like $3,500 a month. That's a good multiple. Like there are properties selling for $800,000 here in London even that rent for like $3,000 a month. The numbers are like no cash flow at all. I heard a number floating around $100 a door. Cash flow a month was a goal that a lot of pro landlords are looking for. So that's a benchmark, I guess. So a duplex would make $200 a month in cash flow. A fiveplex would make $500 a month in cash flow. Single family, $100 a month. But a lot of these investors are just playing for scale, or they're playing for the equity and the appreciation. So hope that helps. When I got into real estate initially, my plan was always to make $30 an hour. I was like, if I can make $30 an hour as a landlord, like that's a great side hustle. And then I was like, I'm trying to make $35 an hour. I'm trying to be a little bit more efficient, make $40 an hour. And now I don't want to get out of bed for less than $300 an hour. Like literally, if you're like, hey, do you want to like come work for me for $290 an hour? I'd be like, no, like I'm good. Even if you offer me 100 hours a week or 50 hours a week, nah, no interest in that. But I've gotten to a point where now I work for capital. I have my capital out there working for me, and my job is to just keep my capital work. Like I have to keep my capital deployed as efficiently as possible. That's more valuable than any of my time. Like my time is not valuable in comparison to my capital. So that's my goal, is to be a steward of my little money soldiers and keep them all working. I'm the general, and I get to decide where they attack and how, and try to lose as little soldiers as possible and multiply the ranks. That's the job, and you're in the early retirement mindset, trying to live off of the wealth that you have. You guys should be doing the same thing. Like you be general, just to a smaller number of troops. The goal is to grow those money soldiers, keep them working. Don't have them idle. Sitting in cash, getting eaten to inflation, that's bad. Sitting in a bank account, making 2% interest, that's bad. Sitting in a mutual fund, again, a bad place to put your guys. They should be working harder for you in the right places to grow quicker, faster. Let them do the heavy lifting for you. My rental property appreciated so much that I have to pay more in capital gains than I collect in rent. Well, you don't have to pay any capital gains until you sell, right? So the nice thing about being able to refinance, you can just keep the property, refinance it, have access to all that money. You've pulled out through a refinance, put a new mortgage on it. The difference is yours. Um, yeah, I mean, you don't have to sell if you don't want to, but yeah, that's pretty much all of Ontario. Like, all of our properties have appreciated so much that like the rental income was nothing in comparison to how much we made from the equity growth. And so we make like a couple $100,000 from cash flow, but we make millions on appreciation on a few properties. It's just crazy. It's been a crazy market. And the next question was, why does it cost $500,000 to buy a one-bedroom, 500 square foot condo in Toronto? Well, that's a long question, but supply and demand is what it inputs into the cost of real estate. One being the actual cost. Laborers, as an example, or contractors, skilled carpenters and contractors, are now demanding, since I started investing in the game 9 years ago, even say 5 years ago, in the last 5 years, most of the trades are asking for 50% more in labor, and material costs are up 200%. So the cost to actually for steel, for lumber, for give you an example. I was looking at doors, replacing some of my doors, slab doors, to change your doors out. Used to be $80 for a slab door at Home Depot. I went in the other day, it was $280 on sale for a slab door. It's 3 times, 4 times in some cases, the price to buy the same materials I bought 5 years ago. That drives up the cost to build. So on one side, you've got how do you come up with value for property? Well, one, it's land, right? There's the land it's built on. 2, it's the building, right? What does it take to build that? If you've got your supply side costs going way up, costs more to build, that's going to drive up the price of all new builds. And as those new builds go up in price, guess what? All the old houses that are already built, they go up in value too, because the lumber you have in your house that is inside of all the walls, it's worth 50% more. Your house is worth more. So instead of these buildings depreciating over time, they're actually appreciating faster than they're depreciating, because the supply costs in them are rising faster than even inflation right now, significantly higher than inflation right now. So the inputs are rising. On top of that, to talk about Toronto in general and Ontario in general, our government the Liberal government is focused on immigrating and allowing people to come to Canada by the millions to grow our population to 100 million over the next 30, 40 years is sort of their goal, right? They are bringing in more people than they can have housing for. In addition, the municipal level government and the provincial governments made it very difficult and expensive for builders to build. It takes years to get permits approved to put dirt underground. So they take in a bunch of people, and they don't make it easy for people to build. They don't make it easy for people who have a regular house who want to put a basement apartment. It takes you a year to the permit process and get it all done. They make it really hard, really, really hard to build. And so they created a supply side issue where there aren't enough houses for people. That drives the price of houses up. And with the inputs at the same time going up, and the market being strong, and the speculators jumping in on top of that, pouring gas in the fire, and we have the cheapest, lowest interest rates in history. You could get a mortgage payment now where we used to pay 7% for a mortgage, say 20 years ago. Mortgage rates were at like 2% in Toronto. So it was 4 times cheaper from a mortgage payment perspective. So when your mortgage payments are a lot cheaper, you can afford to, instead of pay $300,000 or $200,000 for a condo, you'll pay $500,000 because your monthly mortgage payment is the same. Now rates are coming back up, so people can't afford the same. Unfortunately, inflation's at all-time highs at the same time as rates are rising. That could create a situation of stagflation. It could create a situation of an overall market correction, because as the inputs are rising and they're squeezing, it typically crashes the economy. Typically, that's what happens. It's just pain for everyone. So I think the price of the condo will fall, but not a ton, unfortunately, because of the supply side issues, and because demand continues to rise as they open the floodgates to from India, China, everywhere, and they're allowing people with capital to come who come here and are like $500,000 for a condo. That's cheap. In like Shanghai, that'd be $1 million for that condo, and so they don't care. They just want what they want, and there's a supply side issue. So until it makes sense for builders and investors to increase the number of units, to take single-family properties, make them into duplexes profitably, to build skyscrapers, et cetera, so forth, until those issues are solved, or we have a drop in demand in some way, which we're not having right now. Like, there's just so many people still coming to Canada. It's just, there's a number of issues that are plaguing the industry that are keeping the price of a condo at $500,000. Is investing overseas still on your radar? I think you've talked about something in the Caribbean in another video. So wandering nomad, yes. I'm actively working on a deal right now in the Bahamas for a beautiful estate. We have a property closing in Florida. I'll be closing multiple more properties in Florida, hopefully in the next few months, next year, let's call it. I'm actively looking to build. My end state would be, primary residence in the Bahamas, live in the Bahamas, but also travel over to Florida where I can invest. I think it's a great market to invest in. Probably Costa Rica, get another passport there and have, a vacation property there. And then do some waterfront type, resort type commercial properties in Canada. So that's my play. That's where I'm currently bullish. I think that's part of the life that I want to build. And I want to build a business around that, a lifestyle business, right? You want to build a business that suits your lifestyle. You got to love what you do every morning. It's got to be part of your lifestyle or you're not going to excel at it. Next question. Loving the content, Mike. Keep it up. No problem, Kyler. No problem. It's all good. Thanks for sending me the Instagram message. No problem. At Mike Rosehart on Instagram if you want to find me. Yeah, follow along. I do some story posts here and there, like 6 times a day. Hi, Mike. If you had $1 million cash, what would you do in the next 12 months? Lever it up. If I had $1 million right now, I would lever that capital up. $1 million isn't enough, I don't think, well, it depends. You could lean retire on it, but if you had a family like I do, $1 million is not enough to retire on. So I would need to grow that capital. My goal would be to not lose that money. So I think the safest place to not lose that money is for me to go out and hunt and to find properties at 70, 80 cents on the dollar and then go qualify for mortgages on them. Take that $1 million, use it as the 20% down money and closing costs. I can buy about $4 to $5 million in real estate. If I bought that real estate smartly, as soon as the real estate deals are all closed and $1 million is deployed into those properties, I now have hopefully $6 to $7 million in total asset value on those properties. So my equity created, my $1 million down payment, is probably worth 2.5 now. So I just doubled my money by finding, say, call it like 10 good deals, and maybe 5 deals if they're bigger. So you can deploy that $1 million and you could grow it relatively fast using leverage, just cheap debt in real estate. I think real estate's the best way to do that. Maybe because I have the skill set already, so it's easy for me to recognize when I'm looking at a good deal, to find those good deals. But if you're in another business and you have a skill set there and you're like, hey, I could plug in $1 million into marketing and into a few key hires and then just inventory, and I could grow this business double the next year. Put some of your capital there. I think it's the reason real estate is so great is because it's hard to lose all that money. Like, I don't know any real estate investors over 10 years who put 20% down into quality deals and lost everything. With insurance, you never lose everything. And if you're buying smart, you're producing cash flow from day one, right? So that $5 million real estate portfolio, it'll service all the debt for you, and it should produce like at least $100,000 a year in net cash flow for you on a $5 million portfolio you put $1 million down on. So that's where I think that real estate is just the safest way. It's a bitch. Like, don't get me wrong, I'm not going to pretend that it's not a lot of work. It's a lot easier to take that $1 million and throw it in the S&P 500 and just not worry about it, or put a little bit in crypto, a little bit in S&P 500, pick a bunch of stuff, and that's the easy thing. If you're already working a full-time job, you don't have the time. But if you can put in the time, you could grow that $1 million to 2, 3, 4, 5 million in 5 years, no problem. And you do it with a limited amount of risk. With real estate, you only lose if you don't put the effort in. So if you're a shit owner of the property, you let it get deteriorated, you let tenants trash your building, you let shit sit vacant for like if you have a triplex and you have like 2 units vacant, they just sit vacant for like 8 months. I mean, you're a shit owner, shit landlord, shit operator. You could lose money in real estate. But if you just follow the steps, rent it out to quality tenants, even put managers in place, you'll still make positive cash flow if you were smart on the buy. And so that's why I think real estate is still the best place to park your capital. As soon as I see positive indicators for me to grow my real estate business, it's coming. I'm going to buy $100 million in real estate with investors. I'll raise the capital. A lot of it will be debt. My own capital included. I'll put down an equity in each of the deals. But that's my 5-year plan. I am for sure going to buy $100 million in real estate between Florida, probably primarily in the US, but also in Canada along the water. I think there'll be opportunities to buy. And then I like to get a property in Costa Rica and the Bahamas as well. I like to live in the Bahamas because in the Bahamas, you file no tax return. Nothing. There's no reporting. There's no tax time. All good. And then for the areas you invest that you have to pay tax in, like the US or in Canada, you're non-resident there and you have a corporation, which will pay tax, unfortunately, on those assets. There are strategies where you could hire, Bahamas type corporations and flow through capital. Like they could invoice you and you could pay those consultants and bring money to the Bahamas tax free, or very close to tax free. But again, those are more complicated strategies. Talk to international accountants about that. You're gonna have to pay some tax if you invest in developed First Nations. That's just, you pick first world nations because they're solid, they're awesome. And I don't know, I just think investing in many countries is safer. And if something goes to shit in one country, hopefully you got a little bit of protection of properties all around the world. My goal is just not to lose everything, right? My goal is to preserve the capital and grow it. So as safely as possible to grow my capital. Let's do some wrap around, get you guys caught up. What do you think of storage businesses or other commercial real estate? Is it a good investment now? Value add, of course. Yeah, value add, of course. Great businesses to be in. Hard to find storage units at a good discount. There's a real hunger for those commercial properties, and you're bidding against larger, you're not bidding against like mom and pop. You're bidding against larger institutional firms that are buying that stuff up. So it's a challenge, and it's a different type of operating mindset. But yeah, if the right storage unit facility came around, I'd love to have a storage unit facility. I think that the more consumeristic people become, and our society is becoming that way, the more shit people have, the more they need storage. And the nice thing about storage is you can increase the price of it. And eventually, if they don't pay, you just take all the stuff in their unit. So then you have some recourse. With a tenant in Ontario, and by the way, being a landlord in Ontario is the worst. In Florida, you can raise your rents as much as you want. You can kick your tenants out. It's a business. And if your client stops paying, if your customer stops paying you, you have recourse. In Ontario, you have no recourse. Like, literally the tenant stops paying. It's like, what can you do? The tenant destroys the unit, runs with a permanent marker across all your walls and just smashes it with a hammer. What do you do? If they're a bum and they have no assets, there's nothing you can do. You can sue them, but like, if they have nothing, you get nothing. So you can't even get them out. It takes like a year for them to hear your case at the tribunal. You can't even do anything. I once had a tenant stand there and smile at me and just smash drywall. Just smile at me. It's like, what are you gonna do? And I'm like, nothing. We'll see you in a year. A year from now, we'll see you at the tribunal, and nothing will happen. They'll tell you to leave. You get to stay for a year. Keep hitting my drywall. You call the police, they don't give a shit. That's Ontario in the rougher end of town. It's not a great place to be a landlord unless you have good quality tenants. Like, that's why, again, I'm being a little facetious here, but that's why I think that you should be very, very picky on the people you put into your properties. Airbnb is great because if you make a mistake, you can boot them out. Get the credit card on file, you can charge them for damages. In Ontario, you can't take a damage deposit, right? Anyway, I'm gonna go rapid fire through a few of these questions, get this wrapped up because I gotta wrap up the stream for the night. I got about 5-10 more minutes max. Bought a property at 24, 500K at 29 years old, 1.33 million. That's awesome. Way the market is going, I believe I already lost 100K. Do you think I should cash out and sell? Nav, I mean, that's up to you. There's a lot of variables at play. I think a lot of people are trying to time the market. 10 years from now, your property will be worth more than it is now. 5 years from now, it'll probably be worth more. I'm pretty sure 5 years from now, your property will be worth more than it is now. So if your time horizon is long and you don't need the money right now, refinance it right now. Get access to that capital tax free. If it's your primary residence, sell it and buy something else. Sure, you can do that. You can try to time getting out of your property and then getting into something else at a deal because you can negotiate pretty good deals in this market. So in theory, yeah, I think it's actually a prudent move to sell your primary residence and then buy something else. I've done that multiple times. Every time I've sold my primary residence and bought something else, it's been a tax-free move that has allowed me to, typically I'll sell my property for top dollar on the market because my property is just mint. And then I'll buy something else that needs a little bit of love, or maybe I'll negotiate a good deal. And because I'm a good negotiator, my next house, I actually get more value every time I get a new house. So it's annoying to move, but it can work out pretty well for you. Especially in a balanced market where you can negotiate better deals. If you're good at selling, you could sell your house for top dollar and buy something that maybe isn't stage nice, that maybe has ugly paint colors. And if you don't mind that, you get a huge amount of upgrade in square footage or upgrade in location and land for nothing, potentially. $1 million goes a long way. For 1.33 million goes a long way for a nice property. Denny says, hey Mike, what do you think about rent-to-own programs as an investor? I heard you can make 20 to 30% returns and help someone else get into a home. What do you think? Denny, typically the industry is full of piranhas that are preying on people who can't afford to qualify for mortgages. And so they take investor capital and they basically put a private mortgage on it. You as the investor get to invest in that program. You are basically funding the tenant. The tenant is going to have to pay you, if market rent's $2,000, they'll pay you $5,000 a month, and they'll be paying $4,000 a month in expenses with $1,000 in principal equity buildup. More than half, I read some stat about more than half of rent to owns, the rent to own tenant never ends up buying the property. More than half. So majority of tenants you're not helping, you're actually taking advantage of. It's their own fault. They never fix their credit. They never end up being able to qualify. A number of things go through and they don't end up buying the property. In a down market, something like 80% to 90% of the rent to own tenants never end up buying the property, which is fine because the investor, the guy who sets it up, he bakes in $1 million fees for himself at setup, acquisition, and sale. And the investor who puts the capital up, they don't care because they're milking the tenant, they're getting a good return. In theory, the tenant's not going to walk. I've seen a couple scenarios where they brought a property to me that was a rent to own and it was trash. It was renovated halfway. The tenant who was trying to become an owner was fixing up the property the way they wanted because it's their property, but they ran out of money and they left, and the property wasn't worth as much as it was when we bought it because they had deteriorated the value of the property and make it their own, and it was half done. So you can lose money. There's definitely rent to own. Often the tenant that likes rent to own will destroy the property or improve the property potentially in ways that a normal tenant wouldn't. So it could be to your benefit. I know people who are doing very well with it. You don't make the equity upside that you would make by owning the property. In this market, yeah, I think rent to owns are a good idea. As an investor, it's a great play, especially if it depends on how it's structured, because a lot of the time they'll have the tenant pick the house, and so the tenant will go crazy and overpay for the house. And in a declining market, if you're funding the deal that they went and found on their own, ideally you find the house and you bring a rent to own tenant into a house that you believe in, that's at a good value that you like. You don't want the tenant buyer pick the house and overpay for it. So with a few adjustments and the right rent to own tenant in there and the right deal, it's a slam dunk. It's easy, better cash flow than being a landlord. It's way more passive. They typically have skin in the game and security, so there's a lot of safety there. Overall, I love rent to owns in theory. In practice, you need to have a really good operator to find and procure the deal and the tenant and make sure everything kind of comes together in the technical details. But yes, it's a great strategy. It's way better than private lending. It can be structured as a capital gain as well. So there's a lot better tax advantages too, depending on how you set it up. So yes, rent to owns are awesome. And I spent some time studying the ins and outs and watching a ton of content. I actually found a free course online and just watched the whole course so I could learn how to structure rent to own deals. So not an expert, but definitely versed in the subject. Hope that it was helpful. Robin says, I have a rental property that unfortunately is a variable rate mortgage. Me too, it sucks. Primary residence is also variable. But the nice thing about a variable rate mortgage is you can break out pretty cheaply. So if you ever want to refinance or sell or do anything, you have flexibility. He says, thankfully I can deduct the interest as an expense, but the government continues to increase interest. What is the call? I mean, I would just ride with the variable. To be honest, I think over a 5-year period, I'm very sure that over a 5-year period, the total cost of a variable rate mortgage will be lower than a fixed rate mortgage. That's my belief. The last 10 years, that's been true. The 10 years before that, it was true. But historical does not predict future. It has to make the assumption that the government gets inflation under control and brings rates back down. I think they're going to trigger a recession in the next 24 months, which will lead to rates coming back down, in which case I think the variable will win. If you fixed in before, if you were in like December or January, that was the time to fix in. I think now it's too late to fix in. I think in the current rate environment, it's better to go variable. If you're looking for a new mortgage product closing in June, July, August, September, I think you're better to go variable because I think rates, although they're going to keep coming up in the short term, in the long term, they will come back down. You'll be further ahead with the discounts you can negotiate on a variable mortgage right now because there are significant discounts. It depends on the lender. Some lenders prefer the fixed rate stuff and they give better discounts. But I've seen some really dirty variable rates right now where like there are still variable rates under 2%. There are still promotions for 1 point. Yeah, I saw like just 2%. I think it was a 2% 3-year variable or something. So it's, yeah. Eric says, you inspired me to go all in on real estate. Love it. I'm going to go all in on real estate in the next year. I'm still waiting for that time to be just right, but there's no other place you can park capital as safely, where you can exit relatively quickly. You've got that liquidity, you've got that cash flow, you've got that self-servicing, it's easy to lever, it's pretty easy to run, it's plug and play to bring in someone else to run the operation. It's hard to lose money. I buy a business with 15 staff on it. It's similar to, let's say I buy a big building, buy a $5 million building, bring a property manager in, it's plug and play. Property manager sucks. I bring a new property manager in. Plug and play. I bring some contractors in. I fix it up. I bought smart, so I have equity on the close immediately. I add value to the property. It's very simple. I get the rent roll up. I reduce the expenses. I go back to the bank. I refinance. I have a more valuable property than I had before. In business, if I put that by a $5 million business, let's say, a comparable sized business compared to a real estate building, and my key chief operations staff is like, has a baby, and it's like, I'm not coming back to work. Your operation falls apart unless you have really good documented systems. You lose 2 or 3 key staff, your business is worth nothing, right? You lose a major client, you piss off a client that was doing 30% of your revenue. You're fucked. In real estate, it's like you piss off a tenant, you put a new tenant in. There's 10 more on a wait list. Your customers come to you. There's no selling in real estate other than on the sale. And also operations-wise, you can plug and play different operators. It's very hard to do that in a business in the same way. The risk is much higher. That said, you can make way more owning a $5 million business and growing that to a $10 million business. I just think the downside, if I get sick tomorrow and die, my $5 million business, my wife's trying to sell it to like someone who has no idea what's going on, it's worth almost nothing. That building that I bought for $5 million, maybe it's worth $7 million now. If I die, I should buy stuff for 6.5 like that, right? Maybe in a down market a little bit less, but there's just more stability. There's less downside reduction in real estate and way more, not more upside, but more stability for the return. So that's why I like real estate. If you're smart about it, you buy smart, same as buying a business. If you buy smart, you'll make a lot of money. If you buy smart in real estate, you can build a business around buying real estate. I know that if I go buy $100 million in real estate, the way that I buy, it'll be worth $140 million at the outset. Then there'll be over a 5 or 10 year period, there'll be appreciation, there'll be value add, there'll be improvement. I'll buy $100 million in real estate, it'll be worth $200 million. If I was owning, say, 60% of that and 40% went to the investors to raise the capital to help me do it, because I'll put some money in, but I don't have that much money. A lot of it will be debt, probably borrow 60, 70 million from the banks, and you'll still need 10, 20 million from investor partners to come on, and I'll have to put 5, 10 million up, whatever. Something like that. I'm just throwing out numbers, right? Who knows? Maybe I'll probably put a lot less than that. But that I can clearly say, hey, here's a 5-year plan where the worst case scenario is like, I make like $1 million. It's very hard to lose money, even if the market downturns. If you buy smart, if I buy $100 million in real estate that's worth $140 million, I've got $40 million in cushion. If the market dips down 20%, I still have cushion there. So if you buy smart, quality properties, that's the way to go. Whereas it's just hard to do that in the business world. You can do it. Alex Hormozy with his acquisitions.com, he's doing it, right? He's going in and he's turning these businesses around. It's the same thing I'm doing with property. I have a competitive advantage there. I've put the 10,000 hours into real estate. I have to put 10,000 hours in to master these different businesses, to have some sort of operational expertise, right? There you go. I know you guys are going all in on real estate, but to be honest with you, the prudent advice is to not go all in on real estate. Take 20%, put it in the stock market right now. Take 5%, buy some Bitcoin, some Ultra, some Ethereum, spread it out a little bit. Spread your chips around a little bit. I think it's safe to say you can put 60 to 70% of your net worth in real estate. Again, if you are okay with the active pieces that come along with owning real estate. There is work. You've got to manage a manager. It's a business. You're effectively buying a part-time business. You can outsource a lot of it easily. It is very plug and play. It's fairly liquid. Compared to selling a business, it's a lot easier to sell a property. But it's still a business. It's active. For me, I don't have a job, so it would become my baby, my business, to build a $100 million real estate portfolio, right? It would take me a year or two to acquire all those deals and bind them all and get it all set up. But that's part of my long-term vision plan. It's something I just want to do. I just want to prove that I can do it, and it'll be fun. Make some investors some money, make myself some money along the way, and get to a point of real private jet, fuck you kind of money. All right, I think I'm gonna have to wrap this up because I went late tonight. Let me get the last couple questions here. Do you think we keep seeing 50 basis point increases? I think at least one more. Sorry to hear that about the variable. We answered that question already. Yep, I agree. 5-panel, 2-panel. Stay away from the 6-panel doors. They're ugly as hell. I'm gonna change them all at my house because they're so ugly. Have I invested in other tangible assets? Yep. I do have some hard physical assets that I keep. Gold, silver, etc. Yeah, no problem. What career would you suggest someone without a bachelor's degree or any 4-year schooling in order to fast track the FIRE movement? So if I could do it all again, I would have taken a lot of the business learnings, would have bought the textbooks and read and learned and watched videos and took courses and learned all the stuff I learned in business school on the side. And right out of school, like in grade 11, when I joined there was an apprenticeship program for electrician. I'm a smart guy. I feel like for me, electrician felt like something that I could do. So I would have went and did the electrician trade probably right off the bat, or plumber. Plumber's another one that's really easy, but you have to smell glue. So I think I'd probably go electrician. Electrician, right in grade 11, I'd be working apprenticeship, making $20 an hour, or I'd offer for free in grade 11. I'd work for free, get some hours. Grade 12, same thing, get some hours. Right out of high school, I was 17. I graduated high school at 17. I went to university. I was in my dorm rooms at 17 at Western. So otherwise, I would have been 17, working the trades, probably because I'm a smart, hardworking guy. I'm down to work like 12-hour days, 14-hour days. Entrepreneurs would hire me. There's electricians out there who are like, hey, this guy has his own vehicle. He's reliable. He works hard and he's smart. Okay, like just get him on site 12 hours a day. And I would just grind it, right? And maybe I would make 40, 50 grand. But eventually, by the time I had 4 years as an electrician, I'd be a full journeyman. By the time I graduated school at 21, I had a business degree from Rich Ivy School of Business. That allowed me to get a job making, I was making 50 grand a year my first year, which again, I chose a shitty job that didn't pay that well because it promoted fast, it built me a lot of experience, and I could do the real estate stuff on the side. It was a 9 to 5. And I intentionally chose that over the $70,000 a year job. Back then, that was a lot of money in 2014. In early 2014 or 2013 when I was recruiting for that job in early 2014, that was a good job, for a guy out of school. And it's probably like equivalent to 100 grand now. But at the time I chose, I could invest in a side hustle. And so I knew real estate was the thing that I wanted to do. I already had my first property. I was looking at my second one, saving towards my second one. And I just waited a year while I saved my down payment because I didn't know any better ways to do it. But yeah, for sure, trades, way better. I went into business consulting. I did IT business consulting. One of my first ever, I used to write books for a living, which is weird because I have no books now. It just feels like work to me, and I try to sit down and write something. But I used to write 200-page PowerPoint decks. That was what I did. I wrote one of them every 7 weeks. So I published, and they used to sell them, these reports. I published like 1,500 pages in the 3 years that I worked as, technically I was a senior consulting analyst, and then I was a manager. When I was a manager, I stopped writing. I more reviewed. But yeah, I mean, it was shitty. I didn't enjoy it. I wrote on interesting topics though. Internet of Things, infrastructure as a service. I covered a lot of how you integrate IT and how IT as a silo can become business integrated to generate value in the enterprise. So I was more focused on how you teach IT people who are typically geeks to be business focused and to provide value and align so they could basically do more for the business and then get more funding and overall grow their department. So I was helping them become more efficient through business technique. But we also, I go to conferences and learn about the latest and greatest tech, which is again why I like Amazon's cloud service shit, because that was a business I was in. Anyway, I gotta wrap this up. How do you increase your income on the side? Pick up side hustles. That's the best way to do it. Go Google side hustles. There's 100 side hustles you can pick up. Landlording, rental property, flipping, all that is one small segment. You could cut grass on the side. You could do anything. There's so many things you could do. Anyway, guys, I gotta wrap this up. It's been a full hour and I started this stream late. Thank you everyone for watching so much. Remember, the secret to unlocking a wealthier you, 3 levers in your control of your financial future. Spend less, earn more, and maximize returns on the difference. That's it. That's the whole wealth equation. It's what you spend, right? What you make, and basically the difference. So you've got to earn more. Like if you're making 50 grand a year, you need to make more. That's a fact. You want to retire in the next 10 years, you got to make more money. No bones about it. You got to be working as hard as you possibly can. And then on top of that, you got to make sure you don't spend it all. So you got to, at the same time as you're working really hard, you got to avoid eating out. You got to avoid the fancy vacation, the new car. You got to drive the 5-year-old car, the 5-year-old Honda Civic, the reliable Toyota Corolla. For a while, you're going to have to delay that gratification so you can have that big gap between what you're earning, what you're spending, and then you can invest that and it'll start to roll, like rolling a snowball down a hill. Eventually it gets so big that the snowball rolls itself down to the point where like you're making more from maximizing your returns than you are from your day job, in which case it's time to quit your job and enjoy your life and do things that you want to do. And that might be working, that might not be working. It's up to you. Anyway, everyone, it's been a great hour. Thank you so much. Remember, you guys know where to find me on Facebook at Mike Rosehart, on Instagram at Mike Rosehart as well as my handle. So yeah, see you guys on next week's live stream. Bye, everyone. See you in the comments.